very resilient. But
inflation has come down, but the job is not done yet. You still have sticky services inflation, core inflation. It is going to be a bumpy road, and that's going to be a challenge for policymakers.
Others at the table here.
And so we will go at light speed. I am going to dispense with introductions. You know, these people are anticipating right to it.
You know, we did 450 basis points hike in 15 months, which is a huge, unprecedented increase. And this is what I call the strong but lagged policies. We haven't seen the end of it yet. We're seeing tightening of financing conditions like it has never happened before. We know that there is some more in the pipeline, and how it is going to impact our economies, how it will have deflationary impact, disinflationary impact in our region is also to be seen.
Below the average that we've had in the last couple of, and that could go wrong, and that's very important to keep in mind.
Thank you. Director General, let me...
You know, the bond vigilantes are back. The great moderation is over, and the focus has come back to the fiscal and debt sustainability, and there's actually more talk about that at some of the market meetings than even about the soft landing and no recession scenario.
Did you say re-globalization? I would call it probably
way too high, and now it certainly has come down a long way since then.
If we have trade fragmenting and people just trading with each other in blocks of people similar to themselves, this fragmentation, we've done some work, Gita and the IMF has done some work that shows that the real losses to real GDP, global GDP in the long term are substantial. 5% in our case, they had 7%, and for emerging markets and developing countries, it would be in double digits.
-1%. And people ask me, how long do you think it could take to get there? I said, well, maybe